So I think this decade is going to be transformative, but we're still too early to say exactly where this ends up or how quickly this goes. And I think we're, 13 years into this, we're still premature in terms of imagining the world 50, 100 years from now, right? Like we can have these visions of what things happen, but I do think that cryptography has changed and a global network. The combination of a global network with cryptography, with proof of work, with difficulty adjustments has changed the game here in terms of what is possible with money. And Bitcoin is obviously the best version we know of on how to do that.
Welcome to Dream Richer. Bitcoin has been surrounded by some absurd claims over the years, with some saying that Bitcoin will go to zero, others claim that it will go to $1 million. But there's another claim that not many have heard as of yet, that Bitcoin could become a global economic currency one day. The world is moving towards digitization on many fronts. Bitcoin being a digital currency means its use and acceptance could eventually increase. And this is becoming apparent as more merchants accept Bitcoin payments due to their advantages over traditional transactions. The dollar has retained its reserve currency status due to the belief by investors and banks that the US can pay the bills for it. However, the US government's debt has made many investors and banks doubt this capability. Currently, the US debt is 67% of the country's GDP. Perhaps this could be a wake-up call that the US dollar is not as strong as we once thought. Maybe it's time for another asset to step up as the leading asset. Could Bitcoin be the one? By the end of this video, Lyn Alden discusses whether this is a possibility. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
Yeah, I think you could have a free banking system based on Bitcoin, in theory. And it would have advantages over gold in the sense that banks could have proof of reserves. That's the theme that Nick Carter brings up a lot. I think it's a good one. And the fact that it's just inherently more faster, right? That it reduces the desire and the need to hold currencies that are backed by nothing, that cost nothing to produce. And the only way to enforce those ends up being basically force, essentially. That if you want to force people to hold a softer money, it takes some degree of coercion. But right now, it's not super needed because the trust level of these, cryptocurrencies as a whole, especially, and then even Bitcoin, a lot of people can't differentiate between different cryptos. They don't know how Bitcoin's different than Dogecoin or different than Luna. A lot of people just kind of put them all into one bucket. And I think that over time and knowledge, if you do get that large enough understanding and adoption of Bitcoin, it becomes harder and harder to maintain other types of money. Well, we kind of see in emerging markets a model of how that works, where they get to a point where they have a recession and high inflation at the same time. They have stagflation. And that's something that's been very rare for developed markets in the past, during this whole span of the system. So we saw it during World War II. We saw it during the 70s. That was breakdown of the Bretton Woods. And then we really haven't seen it since then. And so now we're seeing it kind of for the first time, cracks emerge in the developed market central banks. And so I think the way that eventually breaks down is when you have high inflation, but they can't raise rates to maintain it, and faith in that system deteriorates and the quantity keeps increasing.
Like what's happening right now.
Like what's happening now.
The case for Bitcoin as an alternative to central banks is based both on economics and technology. Satoshi Nakamoto defined the cryptocurrency as a peer-to-peer version of electronic cash that allows online payments to be sent directly from one party to another without going through a financial institution. This means that Bitcoin could theoretically replace central banks in the future. Why? Well, because it solves three main problems. Number one, it eliminates the problem of double spending. Each Bitcoin is unique and cryptographically secured, meaning it cannot be hacked or replicated. Therefore, you cannot spend Bitcoin twice or counterfeit it. Number two, even though it is decentralized, Bitcoin's network is still a trustworthy system, because transactions on Bitcoin's network have to be approved by nodes spread out across the world. And finally, number three, Bitcoin's network eliminates the need for a centralized infrastructure by streamlining the process to produce and distribute the currency.
So I think in the long arc of time, deflation is kind of the outcome, because even in our current environment right now, let's say you have 3% inflation over a long period of time. If you look at the actual money supply, that might be 6% average money supply growth.
Okay.
And the question is, where's that other 3%, right? So if you have 3% inflation and money creation is actually 6%, it's really because there's a lot of innovation going to making prices cheaper on a regular basis. We can think of it in terms of TVs, computers, smartphones.
So again, what Jeff Booth talks to us about.
Yes.
Yeah.
So the underlying long-term arc is towards technological deflation. So things get cheaper over time, most things, especially when compared to whatever the hardest money is. So things priced in gold tend to get cheaper over time because we find better and better ways to produce more of them. But they tend to go up as priced in fiat currencies because we're making fiat currencies at a faster rate than that technological deflation. And so if you had a hard money environment, whether it's gold, which has like a 2% inflation rate, or Bitcoin, which tends towards a 0% inflation rate, you would incline towards, low negative inflation. And I think we're, 13 years into this, we're still premature in terms of imagining the world 50, 100 years from now, right? Like, we can have these visions of what things happen, but I do think that cryptography has changed and a global network. The combination of a global network with cryptography, with proof of work, with difficulty adjustments has changed the game here in terms of what is possible with money. And Bitcoin is obviously the best version we know of on how to do that. So you can never really fast forward 20, 30 years and say this is what the world looks like. But I think that we've opened this Pandora's box of kind of recreating the possibility of hard money, commodity money, but one that, unlike gold, moves at the speed of light.
It's clear from Lyn Alden's explanation that we could see Bitcoin as the currency of the future. Bitcoin's technology relies on algorithmic trust, and its decentralized system offers an alternative to the current system. Meanwhile, central banks are also beginning to experiment with elements of Bitcoin's design and technology to explore the case of a digital currency. For example, they are already discussing switching to central bank digital currencies. This means that cryptography technology will be accepted by more and more investors, and Bitcoin could be a long-term player. Do you agree with Lyn Alden's explanation? To learn more about the latest crypto news, watch these videos here.